What's up, San Diegans? According to a recent study, San Diego was ranked least affordable in all of California. Congrats! I'm sure that's no surprise, but why? One of the reasons is we've had a huge surge of people moving here from basically the entire West Coast and all the way up to Washington and from much colder climates, hoping to make beautiful sunny San Diego their home. And while Seattle, Portland, and San Francisco Bay Area are more expensive, those people tend to make a lot more money than people here in San Diego. Their housing prices have surpassed San Diego for years. Therefore, their offers on housing tend to go over the top and even competing with cash investors like myself, furthermore crushing the average income buyer. First-time home buyers have virtually been squeezed out of this market. Interest rates being at the historical low lately have had the floodgates open to all buyers because money is cheap. But unfortunately, with the state of affairs, sellers just aren't budging. They're not selling. They're leaving us with this void of inventory for sale. So San Diego buyers were forced to get even more competitive and creative with their offers. No loan contingency, no appraisal, no inspection contingency. They're even borrowing loans to get cash up front to refinance into a more stabilized mortgage later. And this is just not sustainable. As interest rates have climbed to just over 5% now on average, many buyers, especially first-time home buyers, they've frankly given up. So what does this mean for sellers? Will we see a dip in pricing? Researchers suggest we still have more buyers than sellers, so the values and pricing will remain steady and even continue to climb a little. As there is a demand for housing, the home values will remain strong. The average income in San Diego is just over $68,000, which just isn't enough to buy the average priced home here. Some people have used multiple generations of their family to buy, and others, well, they're just simply moving out of state. I mean, we've lost 600,000 people moving away from California just in the last 15 months. And as long as San Diego climate and economy remains a desirable place to live, then there'll always be housing demand and just as many people moving in from more expensive areas. We won't see a bubble burst anytime soon, but we are seeing a steadying, a slower leveling out. I mean, we're still in a climb of over 10% from just last year's values. I mean, buyers still may be in this motivated, fear of missing out feeling created by the recent low interest rates or the chance to buy a house before the prices rise and interest rates rise even more. Higher interest rates will make home ownership more expensive, which should cool the trend of the skyrocketing home prices. According to First Tuesday Journal, don't expect San Diego home sales volume bounce to continue in 2022 into 2023 though. Those jobless homeowners with mortgages have found themselves delinquent, though thus far they've remained in their homes due to the first now expired foreclosure moratorium and then the forbearance plans. As these forbearance programs gradually expire, these homeowners will find themselves heading toward a forced sale, potentially saved from foreclosure due to the high levels of home equity we've achieved in 2021. So in short, San Diego still has some climbing to do in values between now and 2023. This crazed of high-priced, insanely competitive market will stabilize, but not until 2024 or 25 when we see a lot more homes come to the market, giving us more inventory and the interest rates a bit higher than historically low, given us these balanced scales between interest rates and inventory. We really need this for a healthy home market. So my 2 cents based on market research, San Diego still has some correcting to do. Sellers, you still have a little time to go to the market and get your asking price. But buyers, if you're looking for that long-term hold, don't expect to crash. Optimistically, a more stabilized market in the next 2 to 3 years.